Alright, what's up? Coming back with another lesson. We just went over the Fibonacci retracements, how they can be useful in any way as long as you find a low and a high, or a high and a low, such as in this case, we had the against the trend retracement, right? High, low, retraces 61.8, back to that zero, but the strong, the bigger trend, the real trend actually regain control and just send prices even higher. So now we want to talk about finding how you can utilize the Fibonacci retracement plus other tools, skills to go ahead and execute in real markets. So we're going to go from 1997 or in 2000 to today. This is what markets look like today. All right, we're looking at 2 weeks. And to see this in the smaller time frame, let's jump into 30 seconds. Let's go to 2 minutes, 2 weeks, 2 minutes. Okay, we're gonna do 2 weeks, 2 minutes, and we're gonna go as far as we can. Let's go maybe December. I mean, this is all within the last few days. The 2 minutes. Okay, so let's go to December 10th. December 10th, we're seeing markets continue to go higher. Let's cancel out that EMA, 49 EMA. We see prices continue to go higher. So no, Monday, November 9th, we had a price at 361. Okay, so there we go. We had a little. Now I guess we're back down to Friday 6. Okay, this is gonna continue to go more and more and more and more because it's a 2 minute chart. You know, you can go as far as you can. So just gonna pick a spot. So let's pick this spot. The beginning of December. December 1st, I guess. Yeah, end of November. Remember, we had markets kind of explode after the elections. Let's do that. Let's do 10 minutes and market election. Yeah, um, presidential elections. So here we are, October 31st. Somebody's birthday, somebody that I know. Okay, Halloween, Dia de las Brujas. Boom. We were just about 333, I think. Something like that. 333, October 31st, 10 in the morning UTC time, or New York time. Actually, we're at 333. This, and then we fast forward to election day, Tuesday 5th, election. Then we move on to after the election, November 6th. Markets went from 333, or actually 316. This is, all right, so pay attention. October 31st, we're at 333. Now, November 5th, before the election, or the day of the election, we're at 317. 317. 317 to after a day after the election, we're at 353. We're seeing markets go up. Let's put the EMA just for giggles, okay? CMA, seeing close to price. Okay, we go from 317 to now we're 400, and present time we're at 438. So over 106 points higher on the dollar against all major currencies. What do we think the trend is? Well, we think the trend is certainly going up higher. Now, there's got to be some type of retracement, right? Yeah, there's got to be. But is it going to happen now? Well, we don't know. Is it going to be soon? Well, we don't know. We just know that today we have very important news, massive news, matter of fact. The last federal meeting of the year, when they gave their projections for 2025. And when we look at other assets, right? So we're looking at the dollar right now against major currencies. When we look at something like US 30 on the 10-minute, let's look at what happened today. Oh my gosh, what a massive freaking drop. We see Asia session, right? We see Asia sessions retest the prior Asia session levels, went to the high of last session's level, and then it dropped for how many points? Good lord. This dropped for 1,500 points. All in one day? All in one day. Wow. That's the power of trading when something happens, when we have news events such as today, massive news. Federal Reserve went to the podium, came out with the economic projections for 2025, and we see the market did not like the news. Whereas this is the top 30 companies of the U.S. of the country, right? United States. But what did the dollar do? The opposite. While one thing tanked, the other one went up. Interesting. Huh. Utilizing different charts to see the same thing, huh? Perhaps just inverse. Well, maybe. No, not maybe. Definitely. So, how can we utilize this information to make money in the markets? So, say you're looking at this, maybe you could have bought, say, let's find something USD. USD JPY. Let's see what happened to USD JPY. 2 minutes. There's a lot of stuff happening here. Well, excuse me. Let's delete that. And this. Let's delete this. Okay. So, what's today? Wednesday? So, if we're looking at the dollar against major currencies, it's going up. So, we might want to do the same thing with an actual currency pair. Dollar's going up. Get a nice retracement to this low. It held that low. Guess what happened? We found a low. Low risk, high reward setup. Look at this. Should have risked, say, 10 pips. Say you risk 10 pips. You would have had a 10-to-1 risk to reward ratio set up. Wow, that's amazing. Well, we knew the dollar was going up. We didn't know if this news were going to be good for the dollar, but if say you betted that it was going to be good for the dollar, bad for stocks, good for dollar currencies, right? Bad for stocks. US 30 fell. But USD JPY, what happened to USD JPY? Nice. Buy to the upside setup. All right. So, any questions so far? Dear student? No, we're seeing how we're grabbing the dollar against major currencies and we're putting it just dollar against Japanese yen and it looks the same thing, right? Looks the same thing. Put this like line chart. Why? Because you're looking at dollar dominance. If dollar dominance, then that means stock weaknesses. So we're gonna see right now. Let's look at NAS. Wow, NASDAQ too. Wow, look at that drop. Wow, how beautiful. Wow, so market, New York Stock Exchange opened like this. And by the time real news came out, it plummeted. Nasty, 1,000 point drop. Wow, easy $1,000. Easy $1,000. Could have been an easy $10,000. Easy 100,000. It's all the same thing. 1,000 points could have been gazillions. But let's see. What do we have here? US 30 is always looking to retest recent consolidation levels when they mark up or down, and for subcycles are less shallow. What does that mean? Potato, tomato. Just means that if we're paying close attention in these Asia session high low midlines, right? The tool was an indicator. We actually have found that sometimes it gets retested when it wants to continue to go to dropping. In this case, dropping because it's going. The trend is already going down. We have the EMAs, right? See EMAs going down. Price going underneath the EMAs. That means trend is down. But what do we see here? We see drops, right? Price is going down. Trend is down. Consolidation for the Asian consolidation. Low, mid, high lines levels. It spiked up to the last high of the consolidation. For what? So it can continue to mark down. Mark down. And look at the way it marked down. Now that's a way to really assert dominance.
Asian.
Yeah, remember it's indicated Asia session. High, low, midlines. You can find it right here in indicators.
High and low lines.
Asia session, high, low, mid lines. And it's by Maker Major. He's the guy that made this indicator. Maker Major. All right. So once again, the example of today's lesson, or the examples of today's lesson, is very simple. Go ahead and find a chart and see if you can spot three confirmations. All right, so we're looking at the dollar going higher. So this would mean dollars are strong. That means stocks generally weaker. So in this case, we have a note somewhere here. US 30, because it's very volatile, is always looking to retest recent consolidation levels, aka here, and retest them, up here, right? It broke out, broke up higher to retest here, only for it to freaking continue to mark down, collapse, quite frankly. Markets tanked. Yep. For these subcycles though, so if this is a markdown, this would be a subcycle. The subcycles are a lot less shallow. less volatile. So for these, we shouldn't expect them to come and retest recent recent what? Recent consolidation levels. Following so far?
Mm-hmm.
Perfect. So let's go to today's example. So at 9:30, where were we at 9:30? So this is 8:30. 8:30, we had pre-market rally getting out of this consolidation zone. Okay, this is what we had today. Pre-rally. Why are you writing it down? You need to be looking here. There's no look here because I'm explaining. I'm talking. I'm pointing towards something. It's very important for you to follow. So you have consolidation right here, the Asian station um, consolidation of yesterday, last night, right? It begins to break out at London, came back a little bit for London, and throughout the London session, going into New York, right? Because they meet pre-New York stock market open at literally an hour. At this point, it's already New York session from 8 in the morning for Forex. But 8:30 when the market opens for stock, it wasn't until here. So by that time, it's basically back into this consolidation box after they have broken up higher. It's back to the mid. It pierced through, but it didn't sustain. So maybe here we could have gotten a little buy. So let's go to savage candles. So the 15-second candles. So we see it pierce through, but then look at this massive engulf back above here, back above the midline, back above midline. See the 5 seconds. No, 6 to 15. Boom. Sorry about that. So 15 engulf back above midline. So say you could have bought that. Could have bought that. Right? You could have bought because it opened here. So you could have bought that. Real risk right here. You could have gone for a quick 3 to 5, 1 to 5. Risk to reward. You would have had a really, really like painful retracement, right? Perhaps you maybe would have waited until the next. Maybe you didn't catch this right here. You had that engulf. Price went up higher, right? And engulf here, close here, right above the line. So you make that a new area of interest. So there's your midline. The orange is your midline. You go just a little bit above, just a little bit underneath, and so you waited for markets to retrace back to the zone so you can strike. So you finally strike around here. You go
When you say strike, what do you mean by
like
strike?
pull the trigger, enter, enter. So this is your 5-to-1 risk to reward, which didn't actually happen until here. That could have been an entry. This could have been an entry right here. Although maybe this just would have been like a 4-to-1 risk to reward, which is still really good, right? You basically risk not much, right? Risk 16 to make 71. That's pretty awesome. So you enter here, no problem. You got your 5-to-1 risk to reward. Maybe you even got even more. The 5-to-1 risk to reward. Maybe you got 7. But then what happened? For those first few hours when the market opened, the new stock opened, right? From 9:30, 9:30 all the way to around 2 p.m. right before Powell came in. That's already a massive trade. 13-to-1 risk to reward. Risking $16 to make 225. That's an amazing risk, you know. Say you multiply this on 5, you're willing to lose 16 times 5. Maybe say you're willing to lose 60, around 60 to make over 1,300, something like that, 1,400. Not too bad. Amazing, amazing setup. This could have been a great winner from 9:45 to 2. But then what happened? We had Powell come through. Look at this. This is right before Powell comes through. Okay, 2 p.m. The report comes out. Massive retracement. And then what happens? What happened here? So if this is the top, we're gonna grab that top. Do that. Maybe even grab this other top right here. Because this is a distribution, quite frankly. Begin to have consolidation. Here's a new phase, a new distribution phase. Right? Price begins to slow down here. Price begins to consolidate. We see the first break. Fake out. This would have been your best second entrance, your best second entry. After this fake out, here's your best second entry. You could have ran that like that. And boom. You have what here? Can you tell? Can tell the numbers. What does it say? Come on, I can tell. Something like that. Let's see, color white, color black. Okay, look at that. 5-to-1 risk to 6-to-1 risk to reward. Amazing. That's a 2 p.m. What a scalp. This is all in 15 seconds. This all would have happened in how quick? 17 minutes. Insane. Okay, so you see that. You mark this off right here, from here. But what happens? The press conference begins at 2:30. 2:30 right here. And then press conference ends like around here. And look at that. Would you look at that? So let's say this is best entry right here. Best second entry. Right here. All scalps. Third best entry. And by far the most secure entry. There. And you could have had a fourth one right next to it. right here.
Mm-hmm.
All 6-to-1 risk to reward basically. Because what was to come after makes me sick to my stomach missing this right here. Oh, because the lack of capital preservation. And if you don't have no capital, you can't play. Highly recommend everybody to listen to Full by Randomness. We'll read it. Look at this. The art of scalping. I mean, God. This is a 25 so far. 25 to 1 restore war. 36 restore war. My goodness, what is this? It's 70 to 1 risk to reward. I'm willing to lose 1 to win 71. I mean, this is just in insane, bro. Willing to lose 21 points to win 1,500 points. Let's not lose track. Going back to the examples here, right? So what could have made you realize this was a perfect time to buy? Well, like explained over here in golf, at the perfect timing, 9:30. Okay, 9:30 a.m. That's already one confirmation, so you're around the proper time. 9:30, 9:45. You know that good. You know, if you want to trade within the first 15 minutes of the New York Open, no worries. Can't blame you. Very volatile 15 first minutes. 15 first minutes, very, very crazy. So you waited 15 minutes. Well, good for you because you got it 13 to 1 risk to reward. Good timing, proper timing, rather. That's number one, proper timing. So that's one confirmation. You're doing okay. So number one, proper timing. Two, in golf. In golf at critical important level. Three, three could be you can do EMA, say break off 15-minute, say you can use 49. This is 49. Let's use 49, dude. Uh, 18, 19. So price got above 19 again.
Mm-hmm.
EMA's got above. So you're waiting for this other one. No problem. You basically be testing the EMA right here, only to get above the EMA and continue to go up higher. So, but say you stuck with the 49 and you're gonna have the 19 or the 7. Say you had the 7. 7 is a lot quicker, right? You see the 7 EMA right here. You basically came to retest where it got above. Obviously, right now you're underneath, but you're seeing that all the engulf. So say you enter here. Say you enter here. Oh, this is a wrong form. Still. It's near. Proper timing engulf at a critical important zone. So engulf at critical zone. Important level rejection. Put that. Come on. Boom. 3, you could use um, EMA. 7, EMA. 7 EMA, what would you call it? Um, EMA confirmation. Right. So, seeing price staying underneath the EMA here as it's going lower, and then here it got above for the first time. It retests and only continue to stay right there underneath as price kept getting above the EMA. So that could be one, but say you don't use EMA, right? Say you want to use another one. So instead of EMA, you're gonna use a different confirmation. You can use volume. Remember, the more you're waiting for confirmations, especially during scalping, the harder it's gonna be to catch the scalp because you could you could stay there waiting for confirmations. Meanwhile, price has already given you more than enough, aka two confirmations, and whether you take advantage of them, whether you recognize them, whether you spot them or not, it gave you more than enough confirmations. Say you don't want to enter because you're waiting for 5. You're like asleep. You're not even listening.
I listened to a lot of it. I really did.
Anyways, so yeah,
Yeah,
remember,
wait
but
for confirmation. Proper
remember
timing.
that the market is going to give you whatever it's going to give you, but it's how you react. React to what it is that it's it has given you. Ultimately, what this all means is that it's what you make or what it gives you. It's are you in tune? Are you paying attention when it's speaking to you? Whether it gives you an EMA confirmation or not, whether it gives you the volume confirmation. Normally it will give you the volume confirmation because look, we have the sells and then we had the buying and then we didn't see sales. The sales didn't the this volume profiles, it didn't continue to bring the price even lower because look at this one single buying volume profile. It was enough to sustain it from going down lower. So this battle of supply and demand, buyers against sellers, speaks a lot because look, once it cools down for this first 15 minutes, you don't see that much higher selling volume. You see,
Mm-hmm.
starting to see buyers come in, and that buying pressure was enough to keep freaking bears from having prices go lower and lower. So at the end,
Mm-hmm.
it's you have all this to make it whatever but can you at least get two of these confirmations to implement into your scalping decisions, into your scalping plan? Well, sometimes this is all you really need, the proper timing, that you're trading at a proper time, and two, engulfing at a critical zone, important level rejection zone, you know, whether it gives you the engulf, whether it gives you the double bottom or double bottom, double top. It's what you do with this information. In this case, it gave us it engulfed at a critical zone. It engulfed right here. Here's the midline. It engulfed. It broke through, but then it engulfed right above it, and then that was it. That was her sign. Look, it's trying to break even higher. Came to retest the
Mm-hmm.
zone, and bye bye for the next 4 hours until we had the freaking news come up at 2 p.m. Exactly, right? As we're approaching 2 p.m., market still going higher, but now it's beginning to just kind of await,
Stabilize itself.
stabilize itself, right? It, right 20 minutes before the news is released, because the news were released online, and then at 2:30, Mr. Powell shows up to the podium and begins his speech. And then all that after is just pure drama, just show, just pure theater, freaking reporters going back and forth and all that good stuff. Him put in the front, but the news have been released. Now he's just interpreting. You know, they're asking him about his reports, and obviously he's giving the speech and then all the questions. But by the time he's done speaking, you will see markets really begin to understand. At this point, it's almost an hour and a half later since it all came out, and probably about an hour of him talking and answering questions, where market really begins to digest and understand the severity of what just happened. And then boom, there's your answer. This is what markets really think. This is your summary. This is what the market thought of today's news. They got spooked out. So market sold, dollar arose.
Right.
So far, we're 38 minutes in. I hope this is making sense. It's a little bit of fundamental news, a little bit more than anything. The goal was to give some more tools to utilize at the time of engulfing, how we're using these smaller time frames to read price, proper timing, proper zones, levels, and how we can react from them. We can again try to wait with like 5 different confirmations, but market may not give you all 5 confirmations. It's just gonna give you what it's gonna give you, and it's whether you're paying attention or not to what it's telling you, and that's it. Any questions, thoughts, comments? I know you've slept for like half of it, so it's gonna be up to you to go